Hi guys, you are welcome to my channel. Today we'll be continuing the video on how to trade XAUUSD, that's gold. The last time we spoke about some methods or ways by which you can trade gold, and in the first video we talked about top-down analysis where you get to review the market structures on the time frames. Then you can start your review from the higher time frames down to the lower time frames. We also discussed in that particular first video about the candle color and momentum, where you get to review the population or numbers of the green candles on the charts and compare that with the population of the red candles. We also check for candle lengths and wicks for information. If you go to the first video, you get to see these two topics explained in that particular video. The second video, we discussed about how you can plot trend lines on the chart, where you get to drag the trend line tool from the left side of the price chart to the right side, from one candlestick wick to another, from tip to tip. You also note that trend line breakout. You can note the trend line breakout by price for trade entry. All right. In the second video, we also discussed about how to identify the price liquidity zones. Price liquidity zones on the chart. Okay. When you are trading gold, you check for areas on the chart where price has formed pin bars. This may be bearish or bullish pin bars. These zones of pin bars are known as liquidity zones. Price may attempt to reach or test these zones for clearance. So we discussed that in the second video, and today we'll be talking about you marking up the market structure, the higher high, higher low, lower high, and lower low on the screen. So we're going to go to the chart now. This is the gold chart. This is a monthly time frame. We'll look at how we can mark up our higher highs, higher lows, lower highs, lower lows. Okay, going back to the text, we have that you identify the high and low of price from the left side of the chart. Then you mark up the higher high, the higher low, lower high, and lower low price progression on the chart. Because the market structure is characterized by a minimum of 2 bullish or bearish candles for formation. All right, so going to the charts, we'll start with this side of the chart. All right, talking about this side of the chart is the left side, leftmost side of the chart. All right, so that's a low. We can mark it as a low. All right, let's mark that side as a low. All right, okay, that's my low. Okay, now I can call this particular part high point on the chart. Mark it with H. Okay, all right, so if we go back to the text, says market structure is characterized by minimum two or more bearish or bullish candle formation. All right, so we have these two bearish candles. All right, and this makes it 3 bearish candles. So we have 3, 2 or 3. We have 3 here, so we can mark this as our higher low. This low area is higher than this low area, so we can put our HL here, higher low. Okay, higher low HL, and target black, and turn this to 20. Okay, so this is our higher low, because we have at least two candles turning against this particular low to high point. So do we have two or more candles? Obviously we have two or more candles in this particular push up. So we can call this our higher high because this high point is higher than this high point. I'm talking about this high point is higher than this very high point. So it's going to be called higher high. All right. So we can mark that with HH. Higher high. That this particular point is our higher high. Now, do we have two successive drop of bearish candles? We have this bearish candle here, but the subsequent candle is a bullish candle. So, and we also have a bearish candle here, and subsequent one is a bullish candle. So we might ignore this point and proceed to this particular point or this particular point where we have the formation of another bearish candle. And do we have successive? Yes, we can see these two candles around here. I'm talking about this first one, so our first bearish candle, and this is our second bearish candle. These two candles are enough for us to have our higher high. So I'm going to move this particular higher high to this point. This is where we have our higher high. And then the lowest part of these two successive bearish candles will form our higher low. All right, I'm going to put the higher low here. We are still on the monthly time frame and we are marking up the structure, how market moves. So we have the low, high, higher low, higher high, higher low. Of course, can we have high high? Yes, we can. We have two successive, minimum of two successive bullish candles. Okay, so the highest point will be our higher high. This highest point will be our higher high on the monthly time frame. Talking about this point. Okay, do we have two successive bearish candles after that? Yes, we definitely have, but it continues up to this particular point. We have two successive bullish candles along this line. We could have had another higher low or higher high or lower high or something, but it's just one bullish candle. So we look at the end of it. This is where we have the end of it, so we can call this point higher low. It's our higher low. All right, now do we have two success? Yes, we have two successive bullish candles, so we can now call this lower high. This is our lower high. The reason why we're calling it lower high is this particular low. I'm talking about this particular high. This particular high is lower than this particular high. All right, this height here, the high of the candles here is lower than this, so that's what makes it lower high. Had it been these two bullish candles progress towards the top above this top here, then we have a higher high. But in as much as they didn't really go up much before dropping, can call these lower high. All right, okay, so looking back at how we were able to mark up the higher high, higher lows, lower high, lower lows, let's look at the market structure. We have a low here, we have a high, higher low, higher high, higher low, higher high, higher low. Now we now have a lower high. Okay, so now we'll be looking for two successive bearish candles. Do we have? No, so this still assumed to be an uptrend here, but is this a bearish candle? The open candle, the open point is 1814.29 and it closed at 1814.05. So that's a bearish candle. So we have a bearish candle here, we have another bearish candle. These two successive bearish candles. So the lowest point of these two successive bearish candles can be called our low. Okay, and this is the lowest point. So now looking at this, we have a higher low, lower high, okay, and now this is going to give us higher low again. It's going to give us higher low. Reason is that this low is this, whichever is lower, which is lower, this was the low of this point. We have 1676.67. What's the low of this point? We have 1681. Okay, this low 81 is higher than this low 76. All right, so this is lower, this is higher. All right, so that's why we have it as higher low. All right, maybe it drops below this low, and we call it lower low, but it's still, we still have a tiny bit of space around here. That's why it's called higher low. That means this particular low is higher than this particular low. Now this is the low. Now can we find two successive bullish candles? Yes, these are two successive bullish candles, and the top of it will be our high. Now remember, the last high is a lower high. Of course, when we have lower high, higher low, this is going to be a higher high. Still on the monthly time frame, going to be our higher high. Okay, all right, that's our higher high. Okay, do we have two successive bearish candles? Of course, the first two candles are bearish candles. Okay, and the end of it is this point. So we have a higher high. This is going to be a lower low, because this low is lower than this particular low, which is the last low. So this is going to give us lower low. Okay, so this is going to give us our lower low. Do we have two successive bullish candles? Of course, these are the first two candles are successive bullish candles on the monthly time frame. And the end of it, do we have the end of it? Can this be our end? Are there two successive bearish? No, so it still continues until this point where we now have two successive bearish candles. So this is the end of it, the end of the trend. All right, so I'm gonna call this lower high or higher low. What are we going to call it? Let's first of all look at this high. Okay, it's not up to that very high, so we're going to call it higher low, not higher high. Now it's going to be higher low, higher low. Okay, should it be higher low or lower high? I think it should be lower high. It should be lower high, because it's a high, but it's lower than this is the previous high. This is a high, but it's not higher than this previous high, so it's going to be a lower high. All right. Okay, so we have low, high, higher low, higher high, higher low, higher high, higher low, lower high, higher low, higher high, lower low, lower high. Now, do we have two successive bearish candles? Yes, we have two successive bearish. But along the line on this trend, do we have two successive bullish candles for us to establish a low here? No. So it drops here, and this is the last point. Now, this being the last point, the month is still on, it's not closed yet. So if we have two successive bullish candles on the monthly time frame, let's assume this particular current candle end up as a bullish candle to the top. Now we have two successive bullish candles. Okay, then we'll call this, after the closure of the monthly candle, this particular monthly candle, call this higher low. All right, why are we calling it higher low? Because this is a low, this will be another low. Okay, this is a particular low, this will be another low, but this another low is higher than this initial low. All right, so that makes it higher low. Of course, it should be a higher low because looking at the last month's candlestick is a bullish engulfing candlestick. This candlestick engulfs, totally covers the previous month's candlestick. So we expect this current candle to close as a bullish candle. But if it does not close as a bullish candle, all right, but rather closes as a bearish candle, let's assume it closes as a bearish candle. Let's see how let's try and find a scenario where it closes as a bearish candle, it drops lower. That means this point will give us, we have a lower low, we have a lower high. This will still give us a low, a higher low. All right, and if the successive candle continues as a bearish candle, still give us higher low, because no matter what, it is not dropped, it has not dropped below this low. All right, until when we now have another monthly candle form and it drops below this very low, okay, breaking that low, then we now have another lower high. Okay, so it's just a scenario that we are, forecasting. It might not happen this way, it might happen this way. Of course, if it happens this way, this will be a triple top, 1 2 3. It will be a triple top for price to continue to go down. But this is just a forecast. It might not happen, it might happen. For now, last month's candlestick is a bullish engulfing candlestick. Then might see price go up. Okay, quickly looking at the weekly candle, weekly chart. This is our low. We start just like we started, the way we started on the monthly chart. We start with the low, high, or high, low before we start progressing the market structure. So quickly on the weekly chart, we have a low. We have a low here. It's our low around here. This is our low. We have two successive bullish candles. That is a high. Okay. All right. Now, do we have two successive bearish candles? No. All right. So this is another high. Do you have two successive bearish candles? No. This is another high. Do you have two? No. This is another high. Do you have two successive? No. Up until here, where we have two successive bearish candles for us to have a trend around this point. So we're going to move this particular high to this point until we have two successive candles on these bearish candles on this particular trend path, until we have two successive bearish candles on this particular trend path before we mark the highest point at the high and then mark the next point at the higher low. Okay, the reason why we're marking the next point as higher low is because of the two successive bearish candlesticks which happen around here. Now, the next the next trend upward, we have two successive. Of course, the first two candles happen to be two successive bullish candles. Okay. Now, where do we have two successive bearish candles? We have two successive bearish candles here, around here. So we are going to mark this point, the top of that particular two successive bearish candles, as the higher high. Okay. And the bottom as the higher low. Okay. This is a higher low. You can see low, high, higher low, higher high, higher low. Do you have two successive? Of course, the next two candlesticks higher, higher high. Do we have two successive bearish? No. So we still have two bullish successive. So instead of us putting our higher high, next higher high here, we're going to put it here. In as much as we do not have 2 successive bearish candles along this trend. So we're going to put this point as our higher high. Right now, they will do the trend this way. We have 2 successive bearish. Of course, the first 2 candlesticks are bearish candlesticks. So we're obviously going to have a lower. Is it going to be a lower high, which is the high lowest? What is the low around here? The low around here is 1934.08, while the low around here is 1931. So this is lower than this low. So this is going to give us lower low. Lower low. Okay, we can see price moving from a low point here to a high point around here to a higher low, higher high, higher low, higher high. Now we now have a lower low because this particular low, all right, this particular low is lower than this low here. Okay, do we have 2 successive bullish candles? Yeah, these next following candles are 2 successive bullish candles. So this is our lower high. This forms our lower high. Okay, all right, this forms our lower high. Do you have 2 successive bearish candles along the path? Yes, the first 2 candles are bearish, so the lowest point around here will be our lower low. This will be our lower low. All right, do you have 2 successive bullish? Of course, the next 2 candles are bullish, so this will be our, now the identification of this high. This particular high is lower than this high, so this will be higher high. This high is higher than this high, so it will be higher high. We're still on the weekly time frame. This will be higher high. All right, we have 2 successive bearish. Of course, we have 2 successive. So this is a low, and this low is obviously lower. Is lower than this low. Okay, this particular low is lower than this low, so we're going to have a lower low around here. All right, of course, 2 successive bullish candles. It's going to be a lower high, lower high. All right, now do we have 2 successive bearish? Yes, we have 2 successive bearish along this line. Let me delete these horizontal lines. We have 2 successive bearish candles along this line. So the low point, which is around here, will be our lower low. All right, now do we have 2 successive bullish candles? Of course, so this is going to be give us higher high. Still on the weekly time frame, it's going to give us higher high. We have 2 successive bearish. Of course, we do. This going to give us higher low. Now it's going to give us higher low, higher low. All right, so that's that for the weekly time frame. You can see price progressing from low to high, higher low, higher high, higher low, higher high, lower low, lower high, lower low, higher high, lower low, lower high, lower low, higher high, higher low now. Okay, and this week candle has closed. If the next week's candle closes as a bullish candle, closes as a bullish candlestick, next candle closes as a bullish candlestick, and try and put a bullish candle around here for next week. Okay, then we will have another higher high for us to have a trend, upward trend. So that's that for today's video. See you in the next video.